Hi everyone, myself Dr.S.DHIVYA, Assistant Professor, Department of Commerce and Computer Application, Dr.S.DHIVYA, College of Arts and Science, Autonomous. In this lecture video, we are going to discuss the summarized chart. In already previous lecture, we have discussed about the summarized chart. Just we have a recap on that, and we will see one problem on the how we have to pay taxable income for the individual concern. In the previous classes, we have briefly discussed. So just we have a recap on that. When the income is received from India and the income either it is earned by India, it is taxable for all the three. But the thing we have to notice is that when it is controlled in India or when it is controlled outside India, that we have noticed on that. The income earned or received in India, it should be taxable for all the three. Once the income is earned outside India, but it is controlled in India, it is taxable for the two persons, that is ordinary resident and not an ordinary resident. That is outside India, the income is earned and but it is controlled in India. But the fourth point says that income earned outside India, but the business is controlled in India. When the income, when the business is within the India, it is taxable only for the ordinary person. But the income is, but the business is controlled in outside also, it is taxable for both of them. So first 2 points we will memorize. How we will memorize it? Is it income received and earned within India or outside India? All are taxable. Income is earned outside India, but it is controlled in India. It is taxable for 2%. When it is earned in outside India but controlled in India, it is taxable for 1. That is ordinary. And the remaining this will memorize individually. Income earned outside India, but it is other sources of income, not based on the business or the profession. Income is earned by P and capital gain or other sources of income. That except the point 3 mentioned, the remaining things we have to consider the taxable for the resident ordinary, not for the other two. And final thing, it is very easy. The income which is not received for the preceding year. Previous year you are not receiving any income from India or outside, whatever it may be. That should not be taxable for all of three. Okay, we have problems on that. First, we'll see the point number 1. Profit on sale of plant at London, 1/2 is received in India. That is, we are receiving a profit for selling something, a plant we are selling. So 1/2 amount is received in India. The total amount says 1,46,000. So when we divide 1,46,000, it is 73,000. So the 73,000, one part of the amount is received in London. So profit on sale, that is when we sell the plant, we receive the income. So income received, but 50% of the income from London and 50% of the income from India. So how we have to treat this? With the business income received in India, it is taxable for all the three. So 50% of the income is taxable for all the three. And second point says that income we have received in India, but we are receiving from controlled outside. So it is taxable only for ordinary, not an ordinary non-resident. So because 50% we have received in London, so only it is eligible for the ordinary person. Second point, profit on sale of plant in Delhi. This profit on sale we have received. Second, profit on sale and we get in Delhi. So within India, right? So the total amount is 1,02,000. So the question says that 50% received in India, 50% received in London. Received in India and 50% received in London. So 1,02,000, when we 50% is 51,000. We are receiving amount within India, so all the three have to taxable. And the question says that profit on sale of plant at Delhi. So Delhi is controlled in India, right? So this 51,000, even they are collecting from London also. This is the point says income earned in India because plant sale are in Delhi within India, but the control is Delhi and London or whatever it may be. But so the tax amount we have to mention is 59,000 for all the three. So you know the difference between here. In this the amount received in Delhi. Here the amount received in Dubai. So that's the way the difference on that.